Hey folks, welcome to Weekend Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis update is for February 9th, 2009 through February 13th, 2009. Now, as we get into today's weekend video, folks, I really want to kind of step back, take a look at what happened last week and discuss kind of the ins and the outs of the rally we saw, because it was a tremendous rally, especially Thursday and Friday, as we saw the market rip up on both days, Dow up well over 100 both days, and the market really get a firm bid for the first time in a while. Now, we've been in a choppy trading range, and I want to show you that on the daily chart a little bit, but I also want to delve into what we saw last week. Now, the interesting thing about Friday's action is it came really off a good consolidation pattern on Thursday afternoon. Now, Thursday afternoon, you kind of got this move up early from 10 o'clock. Here's your 10 o'clock time frame, and you really ripped higher. But once you got to about midday, 12 p.m. Eastern time, you kind of started to consolidate. And this consolidation pattern played out beautifully come Friday morning. And that's what you really want to pay attention to. It's all about price, pattern, and timing. If you can put those three things in your favor and understand them, that's exactly what you need to really be on the top of your game trading profitably. Now, what I want to show you here is interesting because you got this open, you got a small gap up, and you really got to fill the gap initially right here on this tail off that gap up, and then it was just off to the races. That happened within the first couple minutes, and then your market really never looked back. Now, a couple key trend lines here. First of all, you see you broke out of this upper level. All right, this was key. This was a key breakout line, folks, and you want to just take a note of that you can see this high point. Once you cleared that on the intraday on Friday, it was really going to be an off to the races type day with the market just squeezing all day. Now, we know Bank of America had been pummeled early in the week. It ripped up, and just an unbelievable move. Goldman Sachs was a great one. I want to show you that chart as well. On the 60-minute and the daily on Goldman Sachs. So, again, what we saw, a very nice week last week, profitable across the board for the markets as they all rallied. And this trend line here I did find of interest. Just take it right here and draw it right underneath, and you can see how you kind of maintained this line the whole way up. You kind of tested it multiple times, came back down here, then rallied up, made a new high, came back in, retested it, and then rallied into the close a little bit to close kind of off the highs slightly, but pretty close to the highs. Now, the 60-minute chart is really where I want to spend most of the time today, because the 60-minute chart played out beautifully. I mean, if there's one chart on the SPY, and again, the SPY mirroring the S&P, that you want to follow, it's the 60-minute chart. Why? Well, because it's every type of pattern development, every type of gap fill, every type of resistance level is perfect. It's working out beautifully, and I want to show you why. Well, just lately, I mean, you guys know I could go back here and show you some trend lines, especially this one. This is one I showed you guys last week. Was a beautiful one. All right, this one worked beautifully, how you broke out above that level here. And this is all refreshing kind of from last week's video. But you broke out here, retested that breakout line, held it, you closed below, but the next candle didn't confirm it, which is key. And those of you that are newer to these videos, you have to confirm a move. If you don't confirm it, you're just trading like a cowboy. All right, so please remember that. But you didn't confirm it. That means it was safe as the next candle got right back above it. Then you broke out to the 200 moving average. This line becomes so important even after it does this whole maneuvering. Because look, as you fall back down, you come right back into that level. You gap below it, but you come back and close the candle above it. Then you trade right along that line all the way into that early portion of the week before getting a bid and really rallying up, pulling back, rallying up again. And the key levels are this, guys. Take a look at this. First of all, you want to draw these in. Okay, so let's draw that in. Now, you see where I'm getting that level from. Now, this level was a level for a while ago, but notice how you're taking this gap. See this big gap right here, from here to here? Take that lower gap window area, draw the line straight across. First of all, you notice how we hit it right here, and you bounced up. You see the tails and this one little green candle. That's showing you there's support there. But once that support was broken, it doesn't go away. That line does not go away. In fact, when you get a push back here and rally all the way back up, where do you go? Exactly to that point. Then you sell off, push back up, right? Where do you go before a little bit of a pullback right there? But at this point, the door is getting weak. And what do I mean by that? That's my analogy. My analogy that a trend line, resistance or support is like a door. You run into it enough times, eventually you break through. And that's exactly what you see happening here. You hit it here, bounce back down, hit it here, bounce back down right here. Then finally, on the third hit or so, fourth hit or so, you bust through, making a move all the way up, pausing right on the 200, then actually moving up even higher, coming into this level. All right, so just keep that in mind, folks, as you did come into another key level of resistance. This upper range on the 200, once you broke it, and granted the 200's moved down, but that's still resistance. That's still double top resistance, and it needs to be known, all right, and understood. So what I would say for Monday, folks, keep watch of this upper line, all right, as high as this point. All right, anywhere in between here, the market's going to be into very significant resistance. This whole area right in here, very, very significant resistance. You're pretty much right on it. So would it shock me to gap up on Monday? No, it wouldn't. Right into that range would probably be a decent area, heavy, heavy resistance, and should be watched for a possible pullback off that level. The market from this point right down here to this point, it's a big, big move with very little pullback, and the market does need to consolidate, so we'll watch for that early in the week as well. Okay, now a couple other things, guys, on this chart. Number one, take a look here. You have this gap right here that you can draw a line, and I want to just draw that in and show you where that coincides. All right, let's move that down. Notice this, all right, so you take this little gap area, fill right here, and notice where the market starts to consolidate. It's also right around the 200, and that's also telling you there's resistance there. The market seemed to break above and then consolidate. This is actually somewhat of a minorly bullish pattern on the 60-minute chart of consolidation off this big up move. However, the one thing you have to remember is you're coming into another resistance level right up here, and also the market has gone a certain amount of distance already, and so consolidations tend to fail upwards of this double top area. Alright, so oftentimes you can get a little bit of a move up, a little bit of a breakout off that pattern, but it doesn't go very far. So that's the other thing I would like to just mention there, folks. Alright, so keep that in mind. If we were to consolidate down right around here, it's a much better percentage play, profitably wise, or risk reward, I should say, because you're much lower on the breakout. Now you've kind of run a marathon, now make the marathon runner run another marathon, he's not going to be as strong. And that's the idea behind this chart analysis, okay? Volume last week was decent. Bank of America, let's just touch on Bank of America's chart here, guys. Right here, we added it to our Pro Trader watch list, and look at the move on that after that. And that's, again, Pro Trader watch list is part of our premium package at inthemoneystocks.com. The research center comes with the daily market report, research videos, daily videos, educational videos, hidden gem plays, you name it, it's on there. It's all part of one little package. But in any case, we did add this on this morning right here, and look at that move up on Bank of America. Now, why did we add it? Well, it's the Pro Trader watch list is a compilation of the top traders at our firm and their watch lists every morning when they start to trade. So that kind of gives you an idea behind what it is. All right, now a couple other things, guys. First of all, let's talk about economics this week. All right, number one, the economic alerts for February 9th through 13th, 2009. Very slow compared to last week. Last week was a very insane week, but one thing you want to note here, folks, the 10th, you have wholesale inventories at 10 a.m. The 11th, you have trade balance. That's not a big deal. February 11th, you also have crude inventories at 10:30. That always makes crude move, and we do want to start looking at oil coming into next week, I think. All right. February 11th at 2 p.m. Treasury budget, a non-event, and let's see what else we have here. Thursday is big. Thursday will be a bigger day. You have 8:30 initial claims, retail sales, and at 10 o'clock business inventories. And Friday at 9:55 Michigan sentiment. That's your preliminary number. Okay. Earnings-wise this week, very dead, guys. I just put some notables here, but they're really barely notables. ENER is a fun one to watch. I always like that company because it trades like crazy. It's a great trading stock. Beezer Homes, Rangold, Gold stock, and a home builder stock. That'll be interesting just because those two things have been in play lately. Tuesday, Intercontinental Exchange, ICE. Wednesday, Activision, Marsh & McLennan Company, Level 3, NTAP, and Toll Brothers should be interesting on Wednesday. Their earnings should be very, very interesting. Thursday, California Pizza Kitchen, and really Friday, nothing. So very dead. We're pretty much through the majority of the big companies' earnings. Now you start to get like the Chinese companies reporting. Then you start to get the small caps also reporting. Now they're kind of after the fact of the big boys. So keep that in mind, folks, all right? Now just to touch on a couple last things. First of all, let's take a look at the Goldman Sachs chart on the 60-minute. I love this, guys. If we can get that chart to come up. This was my favorite right here, folks. Notice how it filled the gap right here. Filled the gap, came right back into a necktie, which is a huge amount of support, and then look at the move on Goldman Sachs. We called that actually in our nightly videos. All right, have a wonderful week, guys. Good luck trading. Many profits to all. Come join the Research Center. We look forward to having you. Take care.